everybody. Welcome, welcome, welcome. It's Friday. It's pre-holiday Friday in the markets, and I have an amazing trading battle for you today. Trading battle number 61, which is something you pretty much can say about the markets these days. You know, it's only a market that a mother could love because it's been really, really a big challenge trying to trade these markets either way, because they rip in your face when you try to short them. And of course, they just bleed you down if you try to get long. And I'm just wondering, Chris, to you first, how you've been coping with the change in regime here.
Yeah, so the markets have been rough. There's no question about that. What I do when that happens is to change tack a little bit, in that I get a little bit more aggressive in my targets. I get a little bit more shorter term in my individual trade outlook. And, I just look for those quick profits. So, where otherwise I maybe wouldn't mess with my trades in conditions like as soon as I can, I'm locking in profit.
Right.
Locking the stop even to at least eliminate the risk on the trade, just because of how volatile it's been. So it's been rough out there, though. There's no question.
Right.
It's been rough.
That's interesting. What about you, WT? Do you shorten continuity, or do you pretty much trade the same way? How do you approach it?
Given the strong volatile moves to the downside, and I trade mostly the NQ, I've actually liked this market because my winners are running a lot longer, and so I'm just trailing bar by bar by bar. And normally, I'd have to just leg out, but on these nice swings down, it's been great. The only thing that throws me off sometimes are the violent bear market rallies that are, the V-shaped rallies that you don't see coming. They're a little confusing to trade when you're in a bear market, but outside of that, I'm actually enjoying the volatility to the downside.
Interesting. Our viewers obviously know a little bit about Chris because he's been a repeated guest and he's been hosted the show. They don't know anything about you. I wonder if you could just tell us a little bit about your background, how you got into trading, your basic philosophy of trading. We'd love to hear just a little bit about you.
Sure. But the first time I was interested in the markets, I must have been 12 years old. I bought a share of Bell Atlantic stock. And I read one up on Wall Street.
Oh my God, dude!
Yeah, that doesn't exist anymore.
You are completely, aging yourself. Yes,
I know I am, aren't I? So, and I bought one up on Wall Street by.
Oh, we lost him for a second. Sorry. WT, are you there? Did we lose the WT connection? Oh, so too bad. Okay, so we're going to try to reestablish connection with WT and see if we can get sound back from him. But in the meantime, Chris, even though people know you pretty well because you've been on the show quite a lot, maybe you could just give us a little bit of a short background of how you got into trading and then how you evolved into the kind of trader you are. What kind of trading do you do primarily now?
Yeah, absolutely. So I got my start a little over 12 years ago in the world of Forex trading. I didn't have a background in this, though. My background was actually in the culinary arts. I was a chef prior to getting into this. Yeah.
Wow.
Yeah.
That's so cool. Like, did you you graduated from like culinary school and did you work in restaurants?
Yeah, so I actually went to the Culinary Institute of America in Hyde Park, New York.
Wow.
I don't know if you've heard of it.
Wow. The other CIA.
The other CIA, yeah.
Yeah. It's very well known. I've actually eaten there. It's a real treat.
Absolutely.
And so you sort of graduated and did you practice culinary arts after you graduated?
Yeah, so I never got to graduate because I ended up unfortunately having a pretty nasty car accident. And so I was basically told at the time, either undergo a series of back surgeries, which is just something I wasn't prepared to do, or change the dream, right?
Sure.
And so I was forced to change the dream. So I went and I worked in other fields. I did some work in the legal field for a bit, attorney. And then I found my way to finance by way of insurance with the New York Life Insurance company.
Hmm.
When a position opened up here in sunny, beautiful Florida to come down and sell some Forex education. So I got my start really selling Forex education. I knew nothing, really knew nothing about it.
Right.
But within a month of starting that job, an opportunity opened to become an analyst, and no experience required. They provided all the training. They were basically just more looking for the personality, and the mindset.
Right. Right.
And so I interviewed, I got it, and the rest is history. I've been doing this for a long time, more than 12 years.
Wow.
Now working out in the UK, running my own company called KickStart Trading.
Interesting. Now, you don't know this about me, but I spent my misspent youth in restaurants as well. And one thing that I find, not front of the house, not back of the house, but because I had this idiotic dream that I wanted to run a restaurant, which is probably the only thing worse than doing trading is running a restaurant in terms of your survivorship bias, your survivorship ability. But one thing that I find fascinating, I wonder if you share this with me. I actually find trading and cooking incredibly similar in a sense that a setup is essentially a recipe,
Absolutely.
And if you are comfortable working in a recipe and then obviously, adjusting the recipe to the environment. I mean, honestly, I wish trading was as easy as cooking because there's far less variation in a recipe than there is in trading. But there's a lot of similarities, and I wonder if you feel that way. That if you're comfortable creating a recipe, following a recipe, it's essentially creating a setup and following a setup.
Oh, absolutely, and just like in cooking as well, you have your baseline recipes, you have your baseline formula that forms the basis for a lot of your dishes, right? And then your different dishes is where the variation. It's very much the same in trading too, and just like.
Oh,
hey guys, can you hear
the
me?
recipe?
Yeah, we hear you, KBT. Yeah, go ahead.
Oh,
It's just
sorry
about
about that.
rinsing
My
and repeating.
internet. My internet
Sorry.
cut out.
Okay, let's just do a sound check with WT to make sure he's back up online. Talk to me once are you there?
I'm here. Can you hear me?
Yeah, we hear you great.
So, I apologize for that. It's very rare that my internet cuts out, but it does happen like once every couple of weeks.
Yeah.
So I had to go downstairs and reset the internet box.
I have to reset the internet box. Yeah. So actually, this is a great question for both you guys because I write a trading column every week, and today I'm writing a column about how in trading it's not the big things that kill you, it's the little tiny things that kill you. It's the things that you take for granted that destroy you. And right now, this is one of those things that we all take for granted, which is connectivity to our broker, to our exchange, right? I mean, I am definitely the suspenders and belt kind of guy. Let me just tell you my personal setup. I have high bandwidth cable. I have high bandwidth telephone. So, Verizon and cable. So they both like megabit throughputs. And I have an LTE box from T-Mobile, right? So in other words, I have 3 ways to get internet in case everything fails, including a wireless way if all the electricity in my house fails and I'm not getting that way, right? And that is a lesson from the school of hard knocks. That's the lesson of multiple times where what happened to WT has happened to me, except the consequences aren't like, oh, I'm just missing, 3 minutes of a show. It's me like, I am, holy shit, I'm in a big trade and, and I can't get out because my connection to the broker is lost, or, my algo stopped working and it doesn't know what to do next because my connection to the broker is lost. So I'm just curious, how do you guys, first of all, agree with me that it's the little things that kill you? And secondly, how do you guys deal with just the basic mundane part of trading to try to minimize those risks?
You want me to go?
Yes. Since
it just happened to me,
you screwed up first.
So
yes,
I've actually been trying to get a satellite. I'm trying to get a satellite connection for that very reason.
Right.
But right now, my backup is a phone call to my broker, and they're very fast. Luckily, I traded other brokers who I'd be on hold for 15 minutes trying to close a position because my internet cut out.
Right.
But this other broker I use is super fast, and he picks up the phone. Immediately, I'm out. So right now, my backup is a phone call.
Okay.
But I'm trying to get satellite connection for that reason, and they don't really deliver one to this area of Jersey I'm in yet. But that's what I'm going to get.
Well, you know, I was going to say this quick and easy way for you is just to if you're using you know, your cell phone becomes an internet connection as well if you know how to do that.
That's true. You're right. Actually, I'm going to work on that. That's actually a good third option because I think you should have 3 different backups, frankly.
Absolutely, because sometimes the big two, both the cable company and the phone company, will go down for various reasons. You know, especially in Jersey, as we all know, where there's a storm every 5 minutes and everything gets knocked out. You know, because it's like the 19th century here. What about you, Chris? Like, how do you do backups?
I'm actually seeing a setup right now. If I can maybe share that first, and then I'll.
Sure. Let's do a setup.
Let's
do a setup. Wait, you know,
sorry to jump again.
Let's do some trading. Okay, what are you seeing?
sorry to jump the gun. I just I don't want to miss the opportunity.
Yeah, you got it.
So I'm looking at gold. Okay, good. You can see my screen. Great. So I'm looking at gold.
We see your screen.
Excellent. So I'm looking at gold, and on the day, you know, my initial buy signal this morning was over here. Worked out absolutely beautifully. We've established a new high. The market then came down and basically tested all of the movement for the entire day, right? Right. Literally just came back and erased all the gains from the whole day.
Correct.
But then found support, okay? And as it found support, it left behind a beautiful, this is called a piercing line, right? Textbook piercing line right in here. And so as the market's now moving off of this piercing line, what I'm anticipating is that as it comes up to break the new high, I'm anticipating a break, a test, and then a continued rally. So I'm looking to buy at the break of the high there. So I've got a pending order, and I'll share my parameters with you here. So I've got an entry buy stop here at 1862.05.
Okay. Right.
With a stop loss at 1850.56, and then a take profit here at 1879.30.
So I'm sorry, you're expecting a breakout, then you're expecting a retrace, and then you're expecting a continuation, right?
Exactly. Yeah.
So
exactly.
Why would you buy the breakout and not the retrace?
Yeah, it's a great question, because sometimes, particularly with gold, right? Sometimes we don't get the retracement. So I'm anticipating the retracement, but sometimes we get, you know, just a nice big move. And I've had it to where, you know, when I see a setup like this, when you have a big pullback, you know, it's almost like think of like a catapult, right?
Yeah.
The further back it pulls, the more force it has behind it. And so when that pressure is released, the force is sometimes enough to just push it right through to its target. So what I do in a situation like this is I'll put my actual profit target at 1 to 1.5, but then I'll put an alert at 1 to 1 to alert me, because typically that big move you'll get is for a 1 to 1. And so right at the 1 to 1, unless it's showing aggressive signs that it's still going to continue, I'll probably just take it right there.
Okay, cool. Can you, two things. Can you circle the piercing line? I don't quite understand what a piercing line is.
Yeah, absolutely. So basically a piercing line is this right in here, this formation. And the way we identify it is when the market, when the bears are in control, right, aggressively in control, and then all of a sudden we have a sudden shift where the bulls take back control and bring this to beyond the 50% mark of the previous bear candle. That's the trick.
So they take it above the 50% mark of the bear candle. So that means that, you know, they're forcing the shorts to start thinking about covering, and it's really interesting. I do all of this myself, like very similar, you know, ideas, but just, you know, completely different, sort of similar ideas, but just a different approach, but the same concept. It's all about, it's like arm wrestling, you know. It's all about finding that pivot point where the other guy thinks he's winning, and then suddenly the guy just starts flipping him the other way. And all of a sudden he finds himself on the losing end of the battle instead of the winning end. And that's the perfect place you want to be in, because that's when everybody scrambles to go the other way. That's very, very interesting. Sorry, can you just give me your stops targets again? I'm just trying to figure out so what was the ratios here?
Absolutely. I just want to share, I've got another position up, sorry. And that's going to be on pound dollar. So let me, I'll just go ahead and, if I may, I'll just put this in.
Yeah,
and
go ahead, sure.
With you. So I'm going to sell. I'm going to go ahead and sell.
Okay.
I also am short right now, but we can get into that after, Chris.
Okay.
Yeah, but I was short first, WT, right? So
no, not in that. I'm short in the NQ.
Okay.
Okay.
No, I don't do the currencies. I mean, I trade the currency futures somewhat. Yeah, so you and I are playing two different games here.
I forgot about that.
So this is a 15-minute pound chart. You short the pound on this kind of exhaustion formation, and it's what are the rate? What's the price levels that we're stopping targeting?
So I'm gonna just look to go 1-to-1 here on this one, so let me get my exact entry for you, because I went ahead and shorted at market. Or let me try that again. Thought I shorted at market. Okay, so 26.19 it looks like it's going to be.
Right.
Yeah, 26.19.
Right.
Yeah, so 26.19 was my. I'm going to go ahead and put a stop at 26.45, and then I'm going to look to take profit right at the 1-to-1, whatever price that ends up being. So in this case, that's going to be 25.93.
Okay. So you're looking for them to run the round number, and what's the reason for this?
So we are actually in an uptrend, on a shorter scale on the pound dollar at the moment.
Right.
But I work a lot with Fibonacci's, and right now what we've done is we've hit and fulfilled the most recent anticipated 1.618 extension, and so whenever we see this happen, price rejection off of that D extension. What I call this is a sub fib, right? So in here we have impulse, correction. The idea would be continuation down to the trend line, right? And so this to me move off of this impulse, and so I see opportunity come all the way down to the trend line, and in fact I see opportunity come all the way back to a 38.2 here as well at 25.38. But I'm not greedy. I'm just going to go ahead and take my 1-to-1 on this. But my overall prediction is bigger, but I'm just going to take a little piece of the pie instead of the whole thing.
So interesting. So all of your methodology and logic is within the greater pattern evolution of the trade. Super interesting. Okay, WT, you guys are effectively becoming. This is our challenge number one. Was what we call the Mike Tyson challenge, which is create trades that you think are going to knock your opponent out quickly. So Chris just has gone with a short pound and a long gold trade. Maybe those trades will even resolve before the end of the session, and that will be like the big knockout. But let's see what WT comes up with in a Mike Tyson version of his. So he went short NQ. Tell us a little bit about.
I got short NQ right about here. Do you see my cursor?
Yeah. Now we got
right
your
there. So I use a lot of market geometry, and that's just another word of saying trend lines. Honestly, it's pitchforks and channels, but I use mostly channels. So I looked at this, these highs, price broke above it, probably a lot of breakout. I always take the opposite side of breakout traders when they fail. So a lot of guys broke out there.
Stop right there. When they fail is defined as what?
It's defined as when the price comes back inside the channel, or it comes back inside a broken support or resistance. So as an example, I'll give you an example. Yeah. You see, everyone went short here. They got short. They're like, it's going down. All of a sudden, they all got stopped out. It does a nice retest and rallies. I'm the guy either getting long here or on the retest. These are the guys who got trapped. And I don't do breakouts. I'm always buying when everyone. I'm literally buying when it's the most scary time. But I know when I'm wrong. So I would have shorted here, but I was a little nervous given the strength of the market. But since we only have an hour, My world now just became a 3-minute chart. So,
Okay.
so when this, this would have been a long. This would have been like an ABC down, but that failed. So I'm banking that this could actually drop down to this trend line, that this price can come all the way down here, and if I'm lucky, could be actually a way like a megaphone pattern, and could come all the way down here when the market opens. Now I don't know that. I don't know what's going to happen. So my stop is right here, and I'm just going to wait and see.
Sorry, where's your entry and where is your target?
My entry's right here.
So that's can you just give us some?
Yeah, it's at 12,400.
Okay, and stop is
around 12,415.
15 stop.
Yeah,
and then we're targeting.
I'm targeting this trend line here, so right around here, 12,318. Trying to go for 100 points. So that's my Mike Tyson.
That's your Mike Tyson. So that becomes effectively like a 6-to-1 trade. I think it's a 6.
That's right. That's what I'm going for. Yeah. No, it's I don't. The market could whip me right out in the opening, and normally
the market is going to whip you right out. I'm going to.
I actually think it might. I might even get out of the trade. I'm slightly profitable now.
Yeah.
If it breaks back inside this channel, I might get out.
Get out. Well, stay to the bitter end. Why not?
You know how the opening goes. It goes up, down, wipes out all the stops.
Of course, I know how the opening goes. I mean, I would be shocked. I would be utterly shocked if it was just like, ooh, so easy. Let me sell it and let it go down.
Just because you said that, I might just let it ride.
Just because I said that, it probably will go down like a stone. Because
it's counter trend too. The market's been pretty bullish.
Exactly. Yeah, market is pretty bullish actually today. Let's talk a little bit about the markets, guys. So we got our first round opening trades. We're ready to go. Let's talk a little bit about just your views of the markets. Sort of also WT. What what do you primarily trade? What is your bread and butter trade that you like?
It's going to be the NQ and the NQ, and it's basically doing what I just showed you here. This is how I trade. I use moving averages sometimes for trailing, but I really don't use them for entries. I actually never use them for entries. It's strictly my lines. So my lines are, this purple line, for instance, is a 21 daily moving average. I look at that because we're in a bear market. People might want to sell up to that. So I keep it there because I'm looking at what other traders might do, but it's not how I trade. I wouldn't just take a short there. I need to have my line, my market geometry.
So it's interesting. Effectively, if I was to summarize your general approach to how you trade, you outline your market geometry, which is essentially trend lines, channels, key support levels that you see. And this is, by the way, what is that, a 3-minute chart? That's off a 3-minute chart, right?
Yep.
And then you also look for obviously price action, right? So you have a general idea of like, okay, this is a pattern that I know is either going to fail or continue, and I'm looking for confirmation.
I should have mentioned that I use Wyckoff analysis, so I look at where the bars close, how much volume they're closing on, to give me a sense of whether the level I'm looking at is being respected. So I do look at. That's why I use bars. You had asked me earlier why I don't use candles. The bars show me very clearly where they close. I don't even care where they open because usually they open where they close in the last one. So I just look at where they close.
The close is the most important part of the bar for you.
The close and the size of it. A big up bar closing at the high like this, probably going to see fall through. I look at stuff like that. And if there's no fall through like this one, you have a nice bar closing at the high, but there's no follow through, that means most likely going to reverse. So I look at that type of price action in conjunction with my line work. Okay,
so this is interesting. Like on that example you were showing, the run through the highs and then a failure.
Right here,
yeah, like a failure over there, like right there at the 6 o'clock hour in the morning.
Yep.
What would you trade that?
With this? Oh, you mean this one here?
Yeah.
I would have traded that one. I would have traded that one right up here. When price came down, tried to rally up and failed here, I would have gotten short around here. And then I would have looked for a break below the support
as your target.
As my target. That's right.
It's really interesting. So effectively,
by the way, I got out of this trade when price came back into this channel, just so you know.
Yeah.
I didn't wait.
Yeah. What'd I tell you? Where are we at?
Yep.
It's 9:30. It's 9:30 in the morning. Of course, we're gonna ramp it up. We're gonna ramp it up huge. You know, price. It's like it's a given. It's as sure as day follows night that NASDAQ is gonna rally in your face on the open.
As another example, when people take breaks at trend lines, a lot of times those trend lines will the price will jump back into the trend line. So it was a failed breakdown, for instance, in an uptrend. I'll get long at that failed breakdown because I'm part of what I do is I look at where traders are trapped, and if there's a reason that I believe that the money gets moved around by larger institutions for that reason, to run stops for liquidity. So it is my belief that the market is simply a house of pain, and it moves in the direction of where the most pain is, where the most stops are. And right now, the most stops are on the short side. So now the market's rallying until the shorts until they just don't have the nerve anymore.
Interesting. So just to understand, because it's sort of not as it's A, B, C instead of A, B in terms of the sequence of how you trade. It's interesting. You have a view, you have a structure. There is a failure at the structure, but that alone is not enough for you to trigger a trade. You then look for a retest of that, and if you have a secondary failure of that structure, that's what gives you the confidence. That
actually, I will enter on the first one. Sometimes it's aggressive, and I'll do it. But the second one, almost always, definitely.
Right.
But sometimes you don't. Sometimes you don't get a second one. So I usually do enter on the first one if it's in the direction of where I think price is going. I don't want to say trend because, for instance, let's look at the daily chart. On the NASDAQ,
right?
Price broke this low and rallied above it, tried to break down and failed. We're in a downtrend. So I'm not trading in the direction of the trend, right? But I'll still look for only longs now because right now I have all these. This shows me that the direction now is to the upside, probably breaking this support.
Yeah. No, absolutely. So, I think trend is a meaningless word because it's all contingent on, if you're trading on a yearly chart, it's a downtrend. If you're trading on a 3-minute chart, it's a raging uptrend. It's just a meaningless word and I think that's what a lot of beginning traders get confused in thinking, prices have been going down and I'm short. How come none of it is working? Because you're not short on the right time. You're incorrect on the time frame that you're trading. If you're if you're going to be short and go to sleep for a year, maybe that's going to work out for you. But if you're trying to make this thing work out in the next 3 minutes or 15 minutes or the next hour or the next 2 hours or the next 5 hours, you've gotten the market completely wrong. Would you agree with that, WT?
100%. That's right.
Yeah.
I think the problem is a lot of technical trading books are saying, you should trade in the direction of the trend, buy on pullbacks to the 21 EMA. It makes it all sound so easy, but that's literally a recipe for disaster. Eventually that ends up with a busted account, and then we need, position size is a big part of trading too. And I think that's not addressed as often as it should be.
Right.
I risk 0.5% or less a trade. I don't risk that much per trade.
Okay. You risk about 0.5% of your bankroll. What about you, Chris? How much do you risk per bankroll?
Maximum I'll go up to, and I mean absolute maximum, is 2%. I will not go beyond. But typically, I'm living anywhere, 0.5%, 1% per trade. I don't like to really go beyond that.
Got it. Okay, that makes good sense. Now, both you guys are what I call single entry traders, meaning that you're not going to that 0.5%, you're pretty much going to go all in at the beginning of the trade. You're not going to sit there and do 0.25% here, 0.25% here for full allocation. But you are multiple, at least WT is a multiple exit guy. So he comes in one single entry, multiple exit. Can you tell us, WT, a little bit about your multiple exit structure when it works?
So if it's a corrective market, and what I mean by that is we're not trending, it's kind of chopping. then I'll leg out because I don't know when it's going to reverse and it's a little hard to predict. And if I am expecting a trend day, and I usually anticipate that based on the daily or the 240 chart, I anticipate that based on levels where I think there's lots of stops that can push price through a resistance or support. In those cases, I'll start adding, but I usually pyramid. So if I start off with 5 contracts, I'll add 3, 2, 1, something like that. And then I'll leg out if either a trend line or a high of the previous high or low of the previous bar was broken.
Interesting. By the way, you know, so I'm watching your bar charts here, and it's interesting because you know, I'm a huge believer that the candle close is the only thing that really matters as well. However, what I've actually had, I've had a proprietary indicator that that transforms candlesticks into effectively bars, I guess. So it's funny that you know, I've gone the hard route to what you've done, which is very simple. If those of you, by the way, I think this is it's a really interesting takeaway for everybody who's watching, to go back to bars as just simply understanding, you know, where the candle close. Candle close is one of the most underappreciated, most important piece of information you could have about strength, because it's effectively, that's what it's telling you, the strength of conviction that the market has. And looking at bars is a really, you know, quick and easy way of studying that. So it's interesting.
Yeah. You know, I've used candles for years. Once I started looking at the bars, the candles became confusing to me, and I don't know why, but the bars were just super clear.
Well, you know, if you're focusing on the one variable that matters, which is candle close, then yeah, the bars become very clear. They just, you know, you ignore all of that intra-bar noise, you know, the tests up, the tests down. It really doesn't matter how they swish it up, how they swish it down. I think a lot of times, you know, we get we overanalyze the wicks in candles, and they tend to actually confuse you than help you. It's funny because I've actually created candles that are effectively versions of bars that do that. It's interesting that I kind of, you know, I basically, you know, did something like this, you know, with my technical analysis, but it works. Chris, so, you know, I wanted to just kind of see if we can, I don't know if we have a chance to go to the dashboard. Is the dashboard working? I'm going to ask my producer if we can do that. I just want to get a little bit of an update of where things stand on everything.
I've actually had a couple more positions bars trigger.
Okay.
And so one of them was on pound Aussie. That was a sell on pound Aussie. I shorted 176.48, and I'm taking it down to 76.05.
Okay.
And then the other was a long on euro dollar.
Right.
I went long at 107.20. I've got to stop at 107.04, and I'm taking that to 107.31. But I've actually moved the stop to break even here already. Now, the reason I did that is because I'm essentially hedging against my own position without actually hedging pound, right? So
Understood. Yeah, you kind of hedging. Yeah, you're synthetically hedging. You know what? Let's take a look. I want to take a look a little bit more. Can you walk us through? Where's your screen? No, not this, not the scoreboard. I want to go to Chris's screen. Now, I understand his trades. I just want him to kind of show us on the screen what the reasons for his trades, which would be really good. Let's see if we can get Chris. Here we go. So pound Aussie and euro. So we can start with the euro. You're long euros, right? Partly as a hedge, you said?
I'm long euro. Yeah, exactly. So I'm long euro right here. I got in at 107.20. You can see my position. I've moved the stop already to break even. The reason I did that is because, you know, the whole point of this is to hedge against pound, which has already gone against me quite aggressively, right? So rather than actually hedging on pound directly, I just went ahead and bought euro. And so, but you know, you kind of defeat the purpose if you leave the risk open on the protective position, right? And so there's now no risk on this whatsoever. What I've also done is I've set up on pound because I mentioned to you before, we are in an uptrend here. And so if this breaks above the high here at 126.44, well, then chances are in that case that, my prediction here of it coming back to the trend line is not going to work out, at least for now, because what it'll likely do instead is it'll likely come up, test that B high, and then, kind of go outside of the AB boundary. And so not only have I hedged against the pound position by buying euro like this, I've also gone ahead and set up another position, this time going long, and what I'm looking at is a break of the high there. So if we get the break of the high, then what I have is a beautiful morning star, a test, and then a continuation of that morning star.
Got it. So do you have a hard time doing a stop and reverse? This is effectively, for those everybody who's watching, sort of what's known as a stop and reverse, where the trader trades one pattern or one setup. That setup is failing, but he's sort of completely neutral in his market bias. And when he sees the setup failing one way, he's perfectly comfortable taking the setup the other way, because clearly the market wants to go. He sort of, his focus is just on where is the likeliest movement of the market, rather than where am I going to, I want to be right. Is this something that you've come naturally to you, or is this something that you've had to really teach yourself to do?
Yeah, so it's something that I teach my students all the time, and it's something that I had to learn the hard way. Look, traders, and so the goal here is to make money. At the end, to make money. So whether I'm right about a call or wrong about a call, the real question is, did I make any? Because I can be the best analyst in the world, I can have every single prediction work out perfectly, but if I don't have my trader psychology in order, and if I don't have my risk management in order, then it's not translated to being a good trader. You know what I mean? And the two are not the same thing all the time.
So what does it mean to you to have a trader psychology in order? What does that mean to you? And
it just literally just taking the emotion out of the equation, right? The markets are a very emotional place, and that's, to be honest, most traders fail. Everybody knows that, right? Most new traders. The reason that the primary reason, aside from lack of education, poor risk management, and the rest of it, one of the primary reasons is trader psychology. They don't have a handle on their trader psychology, and the desire, look, none of us like to be wrong, right? And it doesn't feel good when you're wrong. But your challenge, trader, is to learn to separate, the mission from your pride, right?
So is there any psychological tricks that you have that help you to separate the mission from your pride? And this sounds like it's a very interesting approach. It's almost, were you ever in the military, or is this, it sounds like a sort of a something that a Marine Corps guy would focus on.
No, I was never in the military, but I'm really thankful for my culinary background in this regard, because in a kitchen, things go wrong. It happens.
Yes, as I well know.
If you fall apart, say again.
Yeah, as I said, as I well know, because I've spent my fair time in a kitchen.
Oh yeah.
Yes. I've actually find
absolutely.
Have you ever,
things go wrong?
Just sort of a side note, I'm old enough to have actually been in, to have been on the pit, not been in the pits. I've visited the pits because I've never traded in the pits, but I'm old enough to have visited the pits many times, and I always found that the kitchen of the restaurant and the pits of the Chicago Mercantile Exchange were very similar environments, where there was more than once have I seen knives flying and pans going across the walls, where pandemonium reeks. But so back to that kind of very high stress. Right? Sorry?
I said, and that was in the pits. You saw that, right?
That was in the pits, right? Yes, exactly. So back to your sort of culinary environment, where, as you say, focusing on the mission, which is the next task at hand. So the server drops that dish that you've been cooking for half an hour. Sorry, I think, did we lose Chris for a second? Chris, are you there?
What I always say to my traders is, what you have to accept from day one is that you're going to lose.
Right. But I guess my question is, how do you how is it that is it by saying I'm focusing on my mission that you're able to create that necessary psychological distance to be able to do the right thing? Is there any particular tricks that you could share with us that have helped you over the years?
Big one. Meditation is a big one. I like to meditate. I like to go on walks and meditate before a trading session. The other thing is be disciplined about use to the markets. One of the biggest things that will trap you up psychologically is if you spend all day staring at charts. You shouldn't. You should have a start time for your trading, and you should have an end time for your trading, just like any other work day.
Interesting. That's so structure, rhythm, and meditation. Those are interesting takes. What about you, WT? I'm curious about how you are you a stop and reverse trader? First of all, are you able to do that?
Yeah. Well, so I was bullish gold too, but I actually went short gold. I know that Chris wanted to go long, but his breakout never got triggered. So, showing you what I was looking at on gold. Let me just show you really quick. So this is how I use my lines. So basically, gold has found this level of resistance, breaks above it, big failure. This is a news announcement. That's all this was whipsaw on 8:30.
This was the TTB numbers.
Yeah, it comes back up to the resistance, fails. So I went short there. I'm out here. That's all. I wasn't looking to hold this.
Can you slow it down just a little bit? You went short.
Sorry. Let me go to a smaller time frame so you can see. So this level here, it was a level I was looking at right here. Okay. This level is 1850, 58.
Right.
When price came up here, I was looking to see if it failed. When price started to fail here, I went short.
So this is intra.
Oh yeah, I don't wait for the close of the bar. In fact, I'll even look at the speed of how the bar is moving, and I'll look at. This is where feeling comes in, and honestly, I use technical analysis, but I feel the energy of the market. I feel the movement of the bars. I feel if there's pressure behind the move, and then I'll get into the position. That feeling is what triggers me to say, okay, my method is in play, but I have to feel good to press the enter button. I have to feel the energy of the market substantiating, supporting rather, the move that I'm seeing.
Interesting.
And that's why I got short there. But I'm out now because.
So let me ask you a question. So what happens when that feeling is wrong? Like when do you leave a hard stop and just your exit is mechanical, or the market will go down, confirm your movements, you're short, and then all of a sudden within 5 seconds of you hitting the button, it reverses, but doesn't necessarily go to your stop. It just simply reverses. The price action just simply goes against you. What do you do there?
If it hits my stop and it feels bad, I'll still take the stop.
No, I'm saying it doesn't like it's you have the energy is your way, and then the moment you hit the button, the energy reverses, but has not reached your stop yet.
Oh, hasn't? I'll stay in it. I'll stay in it. I'll give it a shot. That's going to be more of a. Usually, I don't. If I'll stay in it because if I don't, I'm going to start over trading, and then I'll get back in if it starts doing it. And a lot of times, once I'm in, I'll let it play out. Unless, of course, there's like a violent move against me, and it's pretty obvious that now I'm on the wrong side. If I kept getting in and out based on how I felt, I'd be over trading. But the actual initiation of a trade. And I think this is true for every trader, whether they want to admit it or not, unless they're trading an algo, then they got to feel good about the trade. Sometimes they'll see their setup and something doesn't feel right.
100%. I have an algo that trades my whole trade cycle, but the initiating trade is always what you would call a field trade. It's me. Do I believe that this is going to be the right trade cycle to initiate? And if the answer is yes, then I do it. And if the answer is no, it doesn't matter if the setup is there, I don't do it. So it's really true. Everything we do in life starts out with a feeling, whether you're highly mechanical and algorithmic or not. And the question is that what I find it interesting is that it may start out with a feeling, but it completes with a process. And I think that's what's interesting about how the problem with most people is they start out with a feeling and they end with a feeling, and that's how they get whipsawed into terrible terrible results. Right? Would you say that?
Oh, for sure. That's actually how I mean, I used to trade that way in the beginning. The problem is in the beginning, you're learning everything. You're reading everything. You're joining different, chat rooms, and you're trying to find your way. And so in the beginning, I was using moving averages and fib retracements and market profile and all these things. And they all work, by the way. I mean, there's no question. But you have to find what resonates with your personality. And for me, the moving averages and the fib levels were too soft for me. They're too. I need a hard line in the sand. This line on my chart is a hard line. I know when I'm wrong, and that's it. A moving average or a market profile, it could break the lower value area. It could break through, the point of control a little bit before reversing. I that doesn't fit my personality. So I found that this fits my personality, and it takes. In the beginning, there's so many arguments to get in or out of a trade. So whatever you're feeling, you could find a reason to support your feeling, because there's always two sides to a trade, the two arguments to it.
Right. No, absolutely true. I mean, I think that's the interesting thing about trading is everything in trading works and everything in trading doesn't work. And it really is. It's kind of like it's your own journey to find what works for you. Super interesting. So we're coming up to the end of the show, guys. I want to do one final challenge before we end up, which is your best trade for the next 5 days. Because we have, we've done a lot of nice short trades, but this is your sort of, your final knockout punch of what do you think is going to work over the next 5 days, a little bit longer time frame, a little bit longer structures. I'll start with Chris first, because he's always ready for a trade idea, right?
I'm always ready for a trade idea, Boris. All right, so heading into next week, look, I've been predicting dollar weakness for this week. It turns out to have panned out. There are a lot of reasons for it. I mean, if you go to the weekly time frame, you can see we just hit a Fibonacci extension level that I've been, and this one happened to be at 2.618. We also hit major resistance, and then last week left behind a nice engulfing bear. This week we've got another engulfing bear. So I mean, I'd roll back early next week to test the sell-off, but ultimately I'm still pretty bearish on the dollar, and I think that's largely to do with pullback we're seeing on the Dow and across the board. I mean, I've been tracking this as well, and I've been bullish on this as well. Not for any reason other than purely technicals, right? There's no fundamental reason, that I would.
Well, there's plenty of fundamental reasons. It's just that if you listen to media, that I mean, I've been trading stocks indices from the long side, making money hand over fist, because there's nothing better than everybody on CNBC and Twitter screaming that this is the end of the world, to know that you were pretty much definitely going to go up. So yeah, but anyways, it's fascinating. Yes, this is the weekly chart. So this is the first big. How many? 1, 2, 3, 4, 5. How many is that? 6, 7 down. 1, 2, 3, 4, 5, 6, 7. 7 down weeks today. This is the first reversal week in the Dow, right? Oh, S&P. Sorry, this is the S&P. Is that correct?
Yeah, that's right. It's been we're rallying pretty hard right now, but the rally hasn't exceeded the length of other rallies that we've had in this bear market. So I'm not convinced we're out of the woods yet.
No, we probably are not, but we are. I think we're beginning to build a tradable bottom.
Yeah, no, I totally agree. This is a nice bottom here. On the I look at the Nasdaq, so this is a nice bottom.
So I'm sorry, I didn't quite get your trade, Chris. Are we going to short the Dixie? Is that the story? What are we doing for the next 5 days? Chris?
Yes. So I'm going to look to short Dixie. Yeah. Can you hear me?
Yeah, we hear you now. Yes.
All right. Perfect. Yeah. So I'm looking to short Dixie. And then what that means is I'm also looking for the corresponding positions on the dollar secondary pair. So in other words, if I'm shorting Dixie, then I'm looking to buy all the dollar secondaries. So pound dollar, euro dollar, Aussie dollar, Kiwi dollar.
Right. Cool. So how would you express this? Would you buy the basket? Is that the easiest way to express the trade, I guess, on the platform? Since Dixie is a little bit hard to trade, it's more of a future.
Essentially, yeah,
Okay.
essentially. So rather than trading Dixie itself, I would just go ahead and translate that into buys and sells on the actual dollar crosses.
So cool. So we're going to put you basically long the majors against the dollar as your 5-day trade. What about you, WT? What's your 5-day?
For the 5-day trade, I'm just going to go long oil.
Oh, okay.
I'm gonna go long oil on my 5-day trade, and that's,
it looks good. I honestly,
you might want to know why. So the reason why is, and this is strictly crowd psychology. There's a lot of stops right here. I believe there's a lot of stops right here. We're making higher highs, higher lows, and I think this is going to gun for these stops. I don't think it's going to break this high, but I think it's going to get in this area, and I would get out right around here. Yeah,
so sort of like you're targeting that 120 magnet.
I'm targeting about 118. If it breaks below this, I'm definitely out. But I'm thinking it's running these stops, and since this is a long-term trade, then that's what I see on the daily on oil.
On this kind of a long-term trade, what is your reasonable stop? Where's your stop at this point?
For this one, I would make my stop probably. I mean, honestly, I'd probably put my stop around here. Probably right around here.
Like
this can come right down. If it breaks this trend line, if it broke it more than this level, I'd be out.
Interesting.
Because otherwise I think it's invalidated at this point if it breaks this low for sure.
Right. Very interesting. I love the fact of how disciplined both of you guys are on letting understanding that your trade is wrong when certain price levels are violated. Sort of, you don't have that, but I still think, Russians are going to squeeze, they're going to kill the Ukrainians. I still think they're going to hold everybody hostage. There's a million things we all go through in our head to justify a losing position. But if you sort of say, no, price is the only justification for my winning position, and if the price doesn't work, I can walk away from that, irrespective of what I think. I can always come back to it, when price begins to work. It creates that, I think, really pure clinical distance. You're like a doctor instead of a relative of a patient. So you have a much cooler, more analytical distance to what needs to be done versus someone who just, I want to save this person at any cost, or I want to save my limit at any cost. That's a horrible analogy, but you guys get the idea.
Right. When I hear people talk about fundamentals, but they're trading a 5-minute chart, I just don't understand that. I mean, you're like, I'm long NASDAQ, I'm long oil because of fundamental reason.
Right.
I mean, the only thing driving a 5-minute chart is literally the crowd psychology.
No, I would say it's legitimate if you are trading an OPEC news announcement. Then it's like, in other words, but if you're trading some ridiculous notion of like, I think oil is a fundamentally long buy because everybody in the world, China is coming back from a lockdown, and you're trading a 5-minute chart, you're an idiot. The only time, the only time, and it's legitimate. I think it's very legitimate to trade fundamentally, but only within the context of news, not within the context of macro. Like, I think that's the thing. People mix up macro versus news, which is not the same thing. And news is a legitimate fundamental trade. Macro is not, unless you're sitting on a monthly chart and you have some long-term expenditure. Yeah. Anyways, guys, it's been awesome. I really, really, really enjoyed it. We kind of just covered everything from making recipes to having default internet connections today. I really, really enjoyed both of you guys on. We'd love to have WT again on the show. I hope you guys who are watching the show really, really enjoyed it. I wish everybody a nice, easy holiday. We're in the U.S. gonna take Monday off and not do much trading. And I have a feeling the markets are going to be slow. They're already starting to slow down a little bit into the holiday session. But we're going to obviously tally up all the numbers at the end of next week, and we'll know who's doing what. Before we go, let's just do our usual thing, which is, Chris, you tell me where people can find you and what charity you're trading for, and any other information you want to share with us.
Absolutely. Thanks so much, Boris. So you can find me over at www.kickstarttrading.com. I'm also on Facebook. Just look up Kickstart Trading. Same thing with YouTube. And my charity of choice is the British Heart Foundation.
Yes, very, very good charity of choice. And you've won some nice money for them already this year. By the way, just to let you know, our sponsor, ACAP, has already donated more than $40,000 to various charities this year. So it's been a really, really wonderful thing they've done. And it's been a huge amount of fun, of course, hosting everybody here and kind of trading for a good cause as well. WT, tell us a little bit about, if people can find you.
Well, they can find me on Twitter,
Okay.
Waltzing Trader handle.
Okay,
And by the way, it's Waltzing Trader. Honestly, I was just trying to find a decent handle on Twitter. The way I see it is, when you trade the markets, you're dancing with the markets, and you have to let the market lead. You can't lead the market. You can't say to the market, come this way. The market's going to tell you which way to go, and you have to follow their lead. And that's why the name. But yeah, people can reach out to me there.
Okay. Are we going to go Dancing with the Stars on this?
No, trust me, I got 2 left feet.
2 left feet. Super. Now, what do you do on Twitter? Like, do you post once a day? Do you post charts?
I post every other day. Believe it or not, I like to post kind of like, it's like market poetry. The truths about the market in word form, and that I find it's like a philosophical way to view the market.
So it's like haikus. You give us.
Yeah, kind of like that. Yeah, and to me, it's a way to express the feelings I have about the market out. And I know it sounds a little weird, but I'm a little weird.
No, it's fine. I hear you. I hear you, Grasshopper. I hear you. You are trading for the St. Jude's Children's Research Hospital, great charity as well. Many traders have traded for them and won them some money. So no better time than now, of course, to use that as a charity as well. So I want to thank you so much, guys, for a wonderful show. Everybody have a wonderful Memorial Day weekend in North America, or in the States. And we're going to see you next week. Trading Battle, going to be hardcore. We got more trading battles coming up, and I hope you guys all enjoyed it. Be sure to subscribe to the YouTube channel, The Trading Battle, so that you guys get this content every single week. Everybody have a wonderful day. Boris Schlossberg for The Trading Battle, over and out.